Awesome.
So we're live.
I think we're live, yeah.
Okay.
Cool. Let's maybe give people a couple minutes. But yeah, I think the goal here really is just to chat a little bit between us about MetaLend and have kind of like office hours. So on a weekly basis, anyone can pop in, ask questions, learn more about MetaLend directly from us, and then obviously we'll pull on other members of the team as well, so people can get to know what's going on behind the scenes, how things are working, etc.
Yeah, so maybe give everyone a minute or two, and then we'll jump into kind of our backgrounds and just talk DeFi, talk MetaLend. It's exciting times.
Yeah, for sure. Oh, cool. Now I can see the chat now.
Yeah.
Cool. Yeah, let's just get started. Nick, do you want to maybe start background on yourself?
Yeah, let's jump into it.
Yeah.
Name is Nick, co-founder MetaLend. This is the first live stream we're doing for MetaLend. We'll be doing them weekly. We believe in sharing everything that we're working on and the team, and sharing that with the community, and also getting feedback and just having open conversation about DeFi, about crypto, and of course what MetaLend's up to. But on the personal side, originally was in Web 2, Ring, the doorbell company, which a lot of you may know, which Amazon then acquired, and was at Amazon for quite some time, right hand to the CTO, building engineering teams globally. It was fun until I really myself became a user into DeFi. Saw a lot of people around me, including a big engineering team that I help manage, using a lot of DeFi and crypto, and that's really when I went down the rabbit hole, and ever since have been addicted, both from building and as a user. It's as we all know, it's the new financial world. So yeah, Sudjeev and I also have a long history. We've known each other for quite some time. Not to make this glamorous or like a movie, but we did start MetaLend from a whiteboard in an apartment together when we were roommates. So in LA. Now we're based out of New York. MetaLend has an office in New York. Small team, about 10 of us, but we bleed DeFi. And I'll let Sudjeev go about his background.
Yeah, what's up, everyone? My name's Sudjeev, the other co-founder at MetaLend, and my background prior to MetaLend was also in Web 2, primarily at ZipRecruiter, where I started as an engineer and then ended up running marketplace products. So back then was just focused on making sure that jobs were getting enough applicants for them to renew on ZipRecruiter. And then I transitioned to product at Bird, the scooter company. And while it's a completely different product, it had similar problems in terms of, over there, I was working on marketplace and growth overall. That was all about where do you put the vehicles to maximize rides and revenue for the business. And it's funny because it's kind of come full circle. And now at MetaLend, we're working on, again, supply-demand type of problem, where it's where do we help users put their money so that they can earn the most yield possible. So pretty much my whole career been interested in this sort of a problem space. And yeah, DeFi, as Nick is saying, it's super exciting for both of us. I've been investing in the space personally for years and using these products. The first one that I ever used was Compound. that's the one that kind of got the gears turning in my head about how how cool this is, how cool it is that you can borrow, lend permissionlessly on chain, pretty much still have full self custody even when you lock it into a contract. Have an insurance that nobody else can take that unless you're illiquid on your loan. So got a lot of inspiration from that. MetaLend started as a DeFi protocol itself before now becoming a layer above that, which actually fits our name better, but sitting on top of all lending protocols. And as I mentioned, optimizing and helping people maximize their earnings from all the individual pools underneath. Maybe I'll give a quick high level on MetaLend and how it works and the problem we're trying to solve. And then Nick, maybe you can jump into the MetaMask partnership, etc. So MetaLend, really our focus is, when it comes to DeFi, we think it's amazing, but it is way too hard to use. And that's why we started MetaLend. Basically, if you are a person with US dollars and you want to earn as much as possible, ideally on chain from DeFi, you have to pick a stable coin, you have to pick a chain, and then you have to pick a protocol. And when you break it down that way, there's hundreds, if not thousands, of options of any one of those kind of SKUs. And so our goal in MetaLend is to give you one place you can put your funds, and we just move them to the highest yield pool. Users that have an opinion on a specific stablecoin or chain or protocol can add that to basically their configuration, which is like settings that only you can edit and only you control. And we will move your funds only to the places that you would approve. And it is all self-custodial. MetaLend does not custody funds. We're basically a router. So you can configure your router, and that determines where your funds go to maximize earnings for you on chain. And that's a little bit high level how it works. Nick, maybe you want to talk about some of the partnerships?
Yeah, I'll get into the partnerships in a little bit, but just wanted to take maybe a step back and also give everyone kind of the sequencing of how things. I know Sudjeev mentioned we were a protocol, but really what's led us to this also is some macro kind of factors. One of which being stablecoin adoption and the emergence of stablecoin. We are a US-based company, and here, stablecoin regulation is quite clear now. It's well adopted. More and more fiat US dollars going on chain. I believe just yesterday it passed another milestone. I think we're close to $300 billion on chain in terms of US stablecoins. So the emergence of stablecoins, right, if you think about it, really being the bridge on chain for a lot of the masses. And then, DeFi was so hard to use. Yes, the user experience, but also because there was so much back-end architecture that was necessary to make things happen, right? So interoperability, let's talk about Ethereum for a second. Even till this day, Ethereum for most isn't usable for day-to-day transaction, whether it's payment processing, whether it's depositing, whether it's borrowing. The fees are just extremely high, right? Like no one wants to use it to potentially deposit $50, which should be allowed, and it is now, and we'll get into that and how MetaLend plays a role. But I just wanted to, talk a little bit about the history of the space that has gotten us here. Interoperability, all of the L2s, all of the on-ramps, and now the off-ramps to be able to spend this money in the real world ties into our partnership a bit with MetaMask and Consensus, which is really exciting. And I just remember the days when we would go through kind of demos. Sudjeev and I have been building in this space now for quite some time, almost 4 years. But we'd go through the demos, whether it was family and friends. Obviously, kind of the OGs and the degens knew, and they had figured out the user experience hurdles. But if we showed it to anyone else 4 years ago, they're like, this is unusable, whether it's financially in terms of cost or whether it's experience. And that was because we needed a lot of architecture to be laid out. And that has been done. I think the space has progressed massively. And now we are ready for a product such as MetaLend, where we tie the entire circle back. To highlight a little bit of our partnership with MetaMask and MasterCard specifically, as if you don't know, MetaMask has a debit card that they partnered with MasterCard on. anywhere, any vendor that accepts MasterCard is essentially now accepting stablecoins. I know they also allow other spendable currency, but now you have the scenario in which you can be depositing through MetaLend, earning, and we do all of the bridging, the routing, the depositing, the automating, and tracking your yield for you in one stop, but also spend that seamlessly, right? And that's where our partnership with MetaMask is. We have a partnership with MetaMask on many other fronts as well, but this is specifically on the card piece, which we're really excited about. You can now go get that coffee or that burger that you usually use your debit card with, and that's earning you. I think this morning, and if you can look on our site, we can go through our homepage a bit, which tells you the daily rates that we aggregate, but it's close to 10%, so it's substantial. There's trillions of dollars at the moment just in the US, and there's even more, hundreds of trillions of dollars globally not earning any interest. The blockchain now brings those, what used to be sophisticated primitives, just to sophisticated banking systems like borrow and lending and having those options. It brings it to the globe. Everyone now has the option to earn. Everyone has the option to earn and then spend. Everyone has the option to potentially even borrow. Of course, we focus on the earn side. But yeah, very exciting times. It's now where you can feel it. MetaLend is playing a pivotal role here and making experience even easier. Yeah, 8.2% is, and again, this is variable. It's dependent on demand. And Sudjeev, maybe you can tell the folks. I'm sure a lot already know. I'm seeing some comments here about the DeFi mechanics, but maybe you can touch a little bit on how the supply demand fundamentals work here.
Yeah, totally. Just looking at the comments, yeah, I think Travis was asking what DeFi platform crypto build. I mean, Compound definitely was the first one. And it is crazy, actually. I'm looking at the comments that, yeah, Aave has just totally taken over because there was, I feel like the last big bull cycle, they were neck and neck. And Compound actually defined the whole model in terms of liquidity mining and everything. I think Andreessen backed Compound. And I'm not sure who the biggest investor was in Aave, but there's a little bit of a rare miss in terms of Andreessen there. But yeah, Aave has really.
I can't right now.
Okay.
Kept pushing forward. I told you guys 5 times. This.
Nick, you're still on audio. But yeah, if you look at the bottom of our homepage, you can actually see everything that we aggregate. We're adding all this into our rebalancer, but this as a starting point just shows you all the different yields across different token types and across chains. So USDC, you can compare the rates, you can see the TVLs, and it is in a lot of ways the two big players now are Aave and Morpho. The example I like to use on explaining the difference between the two is Aave is a little bit like Amazon in terms of you can just like borrow or lend anything anywhere as well. And Morpho is more like Shopify. So is Euler. I think they're both take a similar approach, but they're more like Shopify where they let a third party, a Gauntlet, Steakhouse, whatever, come in, create a market, and then they get a performance fee on that market, and then they can kind of take that around. And so it's interesting to see the split. There's obviously plenty of other ones that are also take a little bit more of a vaulted approach, Fluid, I think Beefy. There's one thing just to add here, just to kind of have a conversation on this, and I saw, yeah, Aave took over. Aave's definitely the leading blue chip. A lot of credit to that team and how they've really evolved and spent. I mean, I think Compound, from outside looking in, looks like they took the approach where they played a little bit more defense, I would say, right? They froze their contracts. They didn't build a ton of features. I know they were DAO'd. A lot of the original founding team also, I think, went and started working on other projects. So that's another conversation. But I do want to say there's more fragmentation coming. Definitely Aave is a blue chip, and they always will be. Morpho's obviously taking market share with their new approach on kind of as Sudjeev outlined as like the Shopify version. Euler's taking a similar. There's a lot of options coming, and I think that competition is healthy, right? Diversification is something we also play a role in. We don't feel that all volume should be in one protocol. Although they take security very seriously, we take security very seriously as well. But diversification and some competition at the protocol level
is good. And what's really, this is more of a philosophical conversation, but what's going to continue to grow that fragmentation and competition is kind of the collateral type that's being brought on chain.
Yeah.
Everyone's been hearing let's talk about this a little bit. Real world assets. And we're not talking about MetaLend much here. We're talking about the space, but it all translates back. Real world assets coming on chain is really going to also fragment things on the borrow side. So you got now protocol specifically. Aave also has like really created a separate version. It's still under the Aave umbrella, but they've created a separate protocol entirely for real world assets as collateral. Because now what you can do is you can attract lenders that are interested in that collateral type, right? It's an entire, like, let's say lender institutions are getting involved, a lot of money flowing into the blockchain, but they're like, no, we don't want to lend against Ethereum for whatever reason. I think there's very far and few people that are bearish on Ethereum in the long run, but some may be. And now we have real world assets that are being used as collateral, and there's more protocols that are focusing kind of on those nuances and those niches, right? Yeah. And imagine the amount of fragmentation that creates. MetaLend is going to aggregate all of that. You shouldn't, you should be able to pick categories and create your own custom lending. I compare that to the banking industry today, right? When you go put money in your CD or your savings account or your money markets, which are yield bearing, you don't really go pick exactly which bond or where the yield is coming from. The bank kind of handles that layer for you, and you trust it. And also, a lot of work we're doing on the trust side, trust and insurance side. If you want to talk about that a little bit, Sudjeev. I know I kind of intersected, but I just wanted to talk about the new fragmentation that's going to be coming at the protocol level.
Yeah, no, on that point, I think that's for sure. That fragmentation is not even only just going to be like protocols, it's actually even more chains, right? The interesting thing is Stripe is launching their own chain, Tempo, which is focused on stablecoins. I'm sure there will be protocols on Tempo that are RWA and borrowing stables against it. I see Travis is saying he's interested in gold. There's lots of players doing tokenized gold and silver. Gold has outperformed Bitcoin so far this year. It's pretty wild. And yeah, more and more of these RWAs are coming on, and there's chains that are being created that are RWA focused. I think Robinhood is in talks for launching their own chain. I know they've had a partnership with Arbitrum that seems like that's morphing into maybe a Robinhood specific chain. And yeah, here's some stuff about Plasma. Also, Aave has a new protocol called Horizon that is supposed to be RWA focused. So a lot of different competition on the RWA side. Base, I'm sure, is going to be doing a lot of RWA stuff as well. So these things are great for the space, but increasing fragmentation for sure. I agree.
And in general, more collateral types does what? Means more yield.
More
borrowers.
And even more security, I would say. I think lenders and stables obviously want to know that their tokens are being lent out against stable assets with very deep pools. And, gold, silver. I mean, imagine the day when you can deploy your stablecoins into DeFi protocols and know that it's backed against like Apple stock and Amazon stock that's just tokenized on chain. That's what we're going to get to within the next couple of years. It's not far away. It's happening month over month gradually, and then all at once. It's all going to kind of convert. And to your point, Nick, that actually makes underwriting risk much easier as well, especially the financial risk. And so, yeah, we are talking to several insurance providers, and you will be seeing stuff around the insurance side on MetaLend pretty soon here. So it's a big priority for us when it comes to DeFi adoption. The two biggest things are usability, which the core issue there is fragmentation, which obviously we're solving, and we're talking about how we're doing that. The second one is obviously risk, right? Everyone hears about the different things that happen in DeFi. Everyone is a little concerned about, hey, how is this yield coming? In fact, there's some retail users that when you say that you can earn 10%, they frankly just don't believe it. And they assume it comes with a great amount of risk. But because these protocols such as Aave and Morpho have billions of dollars and have been around for a long time now, plus the fact that these new collateral types are coming on chain, makes it easier for us to provide risk. And basically the way that it would work is that it would just take some of the earnings off the top to pay for that insurance. Yeah.
Yeah, I'm seeing a comment here, which is, I think, spot on a use case for MetaLend. All right, you mentioned Fave. mentioned holding my stable on MetaLend now and waiting for more dip. That's a nice way to DCA. Yeah, I 100% agree. Historically, people would just sit on dollars being ready, right, to DCA. There's no reason. Again, that's the beauty of this kind of new mechanism. There's no lockups, right? 99% there's no lockup. There's some protocols, I think, doing lockup kind of mechanisms, but for the most part, let's use Aave here. There's no lockup there. You can lend for a day, you can lend for a year, you can lend for a week. That's really what enables what this comment is talking about exactly. It's like, let it sit, let it earn yield. I know what my average that I want to get into an asset is, and then bam, within seconds it transfers over and you can buy an asset.
Yeah, I think that's also the cool thing with the card, right? Where it's not only is it just I see Travis, you're saying this last resort stables and a saving focus. The cool thing here is it doesn't even need to just be your savings account, right? It can be your checkings account. If you connect it with the MetaMask card, it can be your day-to-day spending. Everyone pretty much has a checkings account where they have, some of their capital sitting, and there's no general expectation that you can earn on that. But now you can, and with the MetaMask card, you also get 3% cash back in stable. So it just kind of juices your earnings on a category of money that everyone pretty much has set aside, which is the money that I need to pay for rent, for groceries, for going out, eating at a restaurant. You can now earn on that, and you can earn 3% rewards on that. There's also been a lot of increased activity with cards, such as like the Coinbase card, which is giving up to 4% back in BTC, which is another way. That's a nice way to dollar cost average into crypto as well. And you can, have your stable money just earning for you on MetaLend, pay down your card, and then use your card spend to DCA as well. I think that's another kind of cool trend. That's something that I'm exploring myself as well.
Yeah, I think we're at almost time here. Again, we're going to be doing this weekly. Would love people to put more and more comments. The goal here is to, talk about the space and how that translates back to MetaLend, and how we're adding value back. We love to hear from our community in general on features. Even we'll take calls, one-on-one calls. There's feature ideas. You want to be white glove to deposit. We're just proponents of this space and we want to grow it. There's a lot of exciting partnerships coming up that we'll be announcing in the next few months. We got stablecoin issuers. There's new stablecoins launching on a weekly basis here, and they're not going to tell their users to go get utility from that stablecoin across dozens of protocols. They're coming to us to help distribute, including their incentives. So I think there's a lot of exciting things on the roadmap in the coming months. And it's happening now. So we'll be back next week. So a pleasure.
Yeah. Thanks, everyone. Thanks for joining.